Hello, this is Jim Pellegrino, your host for the hour. Welcome back to our second segment of the show, and our guest is Chris Calandra. Chris, good to have you back again.
Thank you.
Second time guest.
Yes.
This is a very timely interview because of everything that's going on in the financial area.
Yes.
So you are a certified financial planner.
That's right.
Acronym being CFP. And you have 3 offices, one in Southington, Connecticut, one in Madison, Connecticut, and also in Summerfield, Florida.
Yes.
Now, what are you doing in Summerfield, Florida, Chris?
Yes. Many of your viewers might know it as the Villages, which is one of one of the preeminent retirement communities in the entire country. There's about 120,000 or so individuals that live in the Villages. It's a retirement community. Jim,
120,000?
Yeah, it's an amazing place. It's all golf cart accessible. There's 12 golf courses, a hospital, VA.
Where's it near, Chris?
Everything you'd want.
Big city-wise?
It's an hour due north of Orlando in north central Florida.
For goodness sake. So you inserted yourself right where 120,000 retired people are.
Yes, and you probably know this. Florida is the #1 destination for people who move out of Connecticut.
Yep.
And it's also a very popular destination for people who want to snowbird, get away from the winters. So as a financial planner, working with retirees and with money-related issues, it's good to have a presence in Florida because so many of my clients are there.
I heard a number the other day that Florida is the fastest growing state in the union, and it's going to go from, I think, 20 million to 30 million over the next decade.
The economy
it's incredible.
there is red hot. And if you go to Florida and you spend time in Connecticut, the difference is very noticeable.
Palpable. So, Chris, what is a CFP? Who needs one and why?
Sure. Certified Financial Planner is a designation, and it is similar to a CPA, where you could be an accountant but not a CPA. You could be a financial advisor but not a certified financial planner. It's an additional level of education. It's a big examination you have to take.
Licensed?
Yes. You have to adhere to a code of ethics. Is ongoing continuing education. And so a CFP, there's not a lot of CFPs in the country. It's a mark of distinction. And if you read anything or listen to anything about how to select a financial advisor, almost always the advice would include find an advisor that has additional credentials other than just passing your securities examination, and the CFP is the most notable.
Yeah, I hold the CFP in high regard.
Yes.
I mean, I really do. So what's your typical client profile, Chris?
Sure. We serve a variety of clients from millennials all the way through retired individuals, but our specialty is really retirement planning, folks that are moving towards retirement or are in retirement to plan out that segment of their life cycle, which would include what their goals are, how they're going to generate income, how to position their assets for longevity. We work with clients on mitigating taxes. We work with clients on making sure their estate plan is in order. If something should happen, to work with them to make sure that their assets pass on in the way that they want. We'll often work in conjunction with clients, other professionals like their CPA, like their estate planning attorney.
So there's a lot under the covers when it comes to being a certified financial planner. So let's talk about the financial part of it, Chris, okay?
Yes.
The stock market. Why, in your opinion, has the stock market exploded as it has? It's been hovering around or going above 22,000 now for quite some time. I mean, that's really something. So what's happening there? Why?
Yeah, that's a great question. And the market's been on a remarkable run since the election of Donald J. Trump, which surprised a lot of people early on and still surprises people today. I think, Jim, if you pay attention to what I'll call the soap opera in Washington, the dysfunctional press conferences, the Twitter wars, all of the name calling, if you just look at that, the stock market behavior may seem out of the ordinary. But if you look at a whole variety of economic measures, it makes more sense. I'll give you 3. Number 1 is the unemployment picture is fast improving. We're at 4.3%. We started the year at 4.7%, so we had a nice decline. It's the lowest it's been in 16 years. So that's fact number 1, is the unemployment picture improving. Secondly, consumer confidence index has gone way up since the election. So to give you a few facts on that, is last year the index hovered around 98. So if you and your listeners and viewers could picture it, the higher the number, the more consumer confidence. The lower the number, less consumer confidence. So for the majority of last year, we were at 98. After the election, we were at 109. It's an 11% increase from October through December. And now we stand at 121, a 23% increase from just before the election. It's very impressive, and it's at a 16-year high. So we have unemployment picture improving, consumer confidence increasing, and the last data point I'll give is GDP growth, gross domestic product. The total of the goods and services in the United States under President Obama during his administration grew at around 1.5%. It's less than half of the long-term historical average. But not to be too partisan, Jim, under George W. Bush's presidency, we were also running about half the historical rate. So fast forward to this year, in the first quarter, we did an annualized run rate of 1.4%, pretty unimpressive. But in the second quarter, that jumped to 2.6%. And in the Federal Reserve's own estimates for the third quarter, they're expecting 3.8.
Wow, that would be, the economy will explode if we get to that.
It will explode, and I would suggest to you that it already is in many quarters. And when I speak with people, and from what I read, if you separate out the soap opera, people are sensing it. Small business owners, if you look at earnings conference calls of CEOs of major US corporations, you see a lot of optimism. So going back to the stock market, it may seem odd that the stock market has done so well, but if you look at the unemployment picture, you look at the consumer confidence index.
Participation rate is
that is improving. So that is, just to make sure we're all on the same page, that is working age adults that are participating in the workforce under President Obama coming out of the financial crisis was at historic lows, and it hasn't improved that much. But what we find and what the expectation is, Jim, is as more jobs become available, as the economy becomes more vibrant, as there are opportunities for wage increases, more participants will enter into the market.
Let's go back to the stock market in the public relations sense, Chris.
Yes.
One of the things that I hear as a layperson, not a stock market expert, is if you listen to it, it almost comes across sometimes like only rich people can afford to be in the stock market, right? But when you look at the stock market and look underneath there, the stock market and 401k plans and mutual funds plans, they're not mutually exclusive. It's all tied together. So if the quote unquote, Chris, average American has a lot of mutual funds and a lot of them are in 401ks plans, right? To the extent that the stock market's going up and it's all tied in together, the common guy, the common woman, the average American, whatever terminology you want to use, they are benefiting.
Yes.
And they're not wealthy people.
I agree. It's a great point. So I'll add two things. Number one is, if you say work as a school teacher, and let's say you don't have money individually in the stock market, the pension that school teacher has is invested in the stock market. Now, they may not have control of it because the state and or the union might handle that, but they very much have a stake in the stock market. So that means there's far more Americans that are participating in the stock market. It just sometimes takes different forms. And secondly, I'll say that it is a proxy for the health of the economy. In today's world, different than generations ago, a good stock market is good for Americans, because if you're a corporation and the stock is doing well, you're more likely to invest in R&D, expand, make acquisitions, add to payroll, opens up budget opportunities to increase pay. So even if you aren't participating in the stock market, the fact that the stock market is doing well, because it's such an important proxy, does probably mean better things than it would if the stock market was struggling.
Okay, we've got 3 items to go in about 6 minutes to do it in. First, expectation of tax reform. Literally everybody's waiting with bated breath from the individual level to the business level for tax reform. So the expectation of tax reform is going to drive the economy to the extent that people aren't going to wind up saying, hey, is this thing ever going to happen? What's your reading of those tea leaves, Chris?
I think we will get tax reform in one way, shape, or form. I think unlike the healthcare fiasco, there's much more commonality in Republican thinking on the tax side. And my understanding is there's been much more building of consensus and work having been done over these last several years. So I think they could get to tax reform. And there's also a fair amount of agreement between the Democrats and Republicans
right.
as to certain aspects of it. Of course, we do need to get these warring parties, Trump administration, the Republicans and the Democrats, to sit down, be civil, and get some good work done.
They should be able, Chris, to reach common ground on this thing. I mean,
I believe
the
so.
spectrum of tax reform is everything from the major American corporations paying 32% here
Yes.
versus you go over there in Ireland and go to a friendly island and they're paying 16% or whatever it is. So
That's
there's
absolutely right.
that end of the spectrum, and then there's how the individuals are affected. So one would think, Chris, they're going to be able to get together. Next area, regulatory reform. You can just see the president standing up and saying, you know what, while you people are saying that we're not accomplishing anything, you take a look over there and you look at the regulatory reform that's going on. Is he right?
He is absolutely right. I think it's an unreported story like the other couple of points I made earlier. He has done things such as organizing agencies such that if they want to issue a new regulation, they have to rescind 2 old ones.
Yeah, I saw that.
I think that makes tremendous sense. Get rid of ones that don't work, or maybe outdated, are not needed anymore, what have you. In this massive amount of regulations we have, not all of them are needed today. So I think that's an example. One of my favorite economists, Larry Kudlow, said that with Donald Trump's inauguration, that signaled the end of the war on business. Now, maybe you agree with that or maybe not, but reducing regulations, if you could do it sanely, wisely, I think is good for business, and I think it's a contributor on why the market has done well, and I think it's also in those GDP numbers.
Well, I'll tell you what, doing a lot of consulting with the smaller companies, even though I came from the larger corporate life, Chris, I got to tell you that 85% of all new jobs are generated by small business. 85%.
Absolutely.
The major corporations are throwing off the other 15%. You talk to a small business owner, right? Small business owner, and what they will tell you is 8 times out of 10, please leave me alone with all these regulations. Just get out of my way, which literally can't be done, but practically they are overburdened from the federal level and the state level with stuff to do all the time.
That's absolutely
And it
my
just-
experience, yeah. When I was on the show last year, we talked about this before the election, and that was the thing we talked about the next administration. If they could reduce regulations wisely, sanely, free up businesses to power ahead, that would be good, and I think we're seeing that under the Trump administration.
Yeah, I think the other thing is, too, whether or not it was Donald Trump or not, I don't think I'm being hyperbolic, Chris, when I say that what we are going through is not an evolution. We are going through a revolution. And and I'm not saying his style is perfect. It ain't, right? But I'll tell you what, we needed in this country, and you can see what's going on, we needed in this country a president who went in there and essentially is nuking the place and trying to start all over again on the basis of what it is that we said. You know, and if you listen to the content of what he said, there's very little disagreement about the content of what he's saying, vis-a-vis everything we're talking about. Where all the discussion comes in is the style in which he delivers it.
Sure, the soap opera.
Yeah.
But the content and Americans, I think, wanted some disruption, a little bit of change.
Right.
Now, maybe you're getting some change you don't like because, you know, even his ardent supporters, you know, he could rub them the wrong way,
Sure.
and sometimes he makes it difficult. But I think after the last 16 years, the last 2 presidents, including the financial crisis, you know, the country was looking to change things up a little bit. And with that, change is uncomfortable, and not all of it's good. But I personally think at the end, economically, it's healthy, and we see this in the numbers. You just got to separate it out from the soap opera.
I'll tell you what, if they stop their juvenile nonsense in Washington and let the stuff happen that you're describing today, the reality of it is, Chris, is that the older politicians from 3 or 4 generations ago, when they began saying it's the economy, stupid, it happened at the beginning of the Clinton administration, right?
That's right.
James Carville was right on.
100%.
And the bottom line is, if you're employed, your family's doing well, kids are getting educated, et cetera, et cetera, et cetera, Americans are happy people. It's when the economy is not doing well, when all this dissonance comes in. If they could just get together.
Yes.
I hear you mention like 3.8 growth.
expected for the third quarter.
Versus, Chris, what was it, 1.2, 1.4?
Under President Obama's 8 years, the average was 1.5.
1.5.
And we're building from 1.4 in Q1 to 2.6 in Q2, on our way to expecting 3.8 in Q3. That type of economic growth doesn't solve all of the nation's problems, far from it, but it will go a long way to providing money to our citizens to continue to make the country
Disposable
great.
income is a wonderful thing.
And give the government tax revenues to do the things it wants to do.
Although we have to be careful, Chris, because we know that if you give the government money, they will spend it. So having said that, we got about 1 minute left. No, this is all pretty good news. As unreported as most of it is, it's good news, right? So let me ask you a question without sounding facetious. Is what we're looking at good, old-fashioned economic optimism, or are we looking at false euphoria here? We got about a minute.
I think it's good old-fashioned economic optimism that Donald Trump gets some credit for, but I think it's our time. You know, it was a rough couple of years after the financial crisis. It had a really hard effect on many Americans, and I think we're starting to come out of that hangover. Again, some of it's Donald Trump, some of it I think is just timing, and I think that consumer confidence index number that I spoke about at a 16-year high, I think it's legitimate. I think it's well-deserved. And if the politicians could just cooperate and do what they're supposed to do, the people's business, we can see some sustained growth and sustained consumer confidence.
We've got about 30 seconds left. If it were 1 year from now and I had you on again, what would you be saying, Chris? 30 seconds.
I think I would be saying that 2017 was a year that changed the trend line on GDP growth. And for the first time in over 16 years, GDP growth is approaching or exceeding 3% GDP growth, which is going to do wonders for the economy, not just the stock market, wonders for the economy.
Excellent. That's going to have to be the last word. My friend Chris, good having you back
Thank you,
again.
Jim.
Look forward to time number 3.